As 2023 comes to a close, I want to give you an update on one of my favorite charts that has 3 important takeaways that all investors should understand. Okay, so let's go to the chart. So what we've got here is these black or dark gray bars that represent the end of year returns for the stock market going back to 1980. And as you can see, most of the time they're positive, some of the time they're negative, and as of year to date, it's positive. So what does that mean? It means that on December 31st of that year, that is the return that you got in the S&P 500. Okay, great. What are those red dots? So while many years the market is positive and sometimes the market is negative, these red dots represent what is called intra-year volatility. So that is volatility or downturns throughout the year, not just at the end of the year. And so what does that mean? Well, if we just go to year to date as of this year, and right now we're in December 2023, while the market was positive so far this year, we have a downturn of 10%. And so what that means is that's a drawdown or a negative return from its peak. And so what does that mean? Why is that important? Well, if you notice, every single year has got a black bar, a dark gray bar, and then it's got a red dot that is below that, which means at any given time in the year, the market has had a drawdown every single year, okay? Now, for long-term investors, the important number to understand with these red dots is 14%. Why is that an important number? That is the average downturn in the market every single year. That's average, 14%. And so when you're thinking about your portfolio, understand that 14% is just the average. Sometimes it's less, sometimes it's more, but those drawdowns are incredibly common. So that 14% drawdown is the first number that you need to know, is that is going to be happening every single year in the stock market. That is the price we pay for being long-term investors. Okay, what is the other important number to understand here? Okay, the other important number to understand here is 32. So this chart has 43 years on it. Of those 43 years, the market was positive 32 times. So there's a couple of takeaways from there. Well, the market was positive the majority of the time, so around 75% of the time. Well, that also means the market was not positive 1 out of every 4 years. So as long-term investors, we should anticipate on the whole, markets go up. However, the market is going to give us a down year pretty consistently. These are not uncommon. This is, again, just part of the investor experience. So going back, the red dot means the market's going to go down on average 14% a year, right? Sometimes more, sometimes less throughout the course of the year. However, number 2, it still goes up the majority of the time. What is the third important thing to take away from this chart? So this looks like over the last, since 1980, 40-something years, this looks like a pretty rough experience. We have up years, we have down years, and we have red drawdowns basically every single year. Well, the important takeaway here is the market averaged over 10% during this time period. And so realizing that while people talk about averages in the stock market, it is a very bumpy ride. And so you have to understand the red dots mean the market goes down at some point every year. It goes up most of the time, right? But not every year. But on average, it's going to give us those rates of returns, but realizing we have to deal with the ups and downs along the way. I hope you found this helpful. And as always, thanks for investing your time with the Personal CFO.